Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about once more on Mara. So this is an updated due diligence. It's going to have due diligence technical analysis breaking down in the description below to where you can find each. The entire video will be a video that will give you a chance to make an educated decision. Now, if you would like to watch my previous video, you'll find it below for Mara. Nonetheless, this one will be a standalone video. Make sure to drop a like to this video to help the channel grow. Subscribe, leave notifications on. Let's jump right into it. So, Mara. Mara is a Bitcoin producer, between quotes, a miner. And the way that they actually develop money is through Bitcoin mining. And so, what is mining? Blockchains are decentralized digital ledgers that record and enable secure peer-to-peer transactions without third-party intermediates. Now, blockchains are secured by miners that use powerful computer networks to secure and verify every transaction. And the way that they actually go on with the calculation is the block reward multiplied by 6 times over an hour, multiplied by 24 hours a day. And as of May 11th, they have around 900 Bitcoins per day. And I'll go through the presentation, or updated presentation on what's new. Let's get right on it. I believe this presentation was coming out to be somewhere around December 12th. So currently, they are producing from what was 900 Bitcoins per day on average. Right now, it looks like the 900 Bitcoin per average is the general production. Currently, Mara is producing 15 to 20 Bitcoins per day. And so they're building on the largest self-mining operation in North America at one of the lowest energy costs. Potential to grow monthly revenue from $500,000 to 11.7 million by the fourth quarter of 2021 by aggressively increasing mining power, by reducing Bitcoin production costs, and adding proven industry experts to the team. And that is massive. Their mining facility is in Hardin, MT, while their headquarters is in Las Vegas, Nevada. So they have around 33,560 miners currently at a 2.7% global Bitcoin hash rate. The electricity cost is 0.028 per kilowatt per hour. Now, moving on, Mara puts himself as a producer compared to actually producing the coin itself through Bitcoin or through investing into an OTC trust account such as Grayscale Bitcoin Trust. And one of the first things we see is the change of Bitcoin versus Mara. You get to see that Mara has exploded quite a lot compared to Bitcoin. I'm not sure that is a good thing to do or to have. But you can get to see it is a sympathy play, but at the current times you get to see some exaggerated moves, in my opinion, because what you want to see is more of a similar growth. But here's the difference. Mara is not just a Bitcoin trust account, right? They're doing a lot of changes from their own company structure, and that's why you see this massive growth. I'll go a little bit in details about their book value and what I think about it. So their adoption is accelerating for Bitcoin. Square, for instance, incorporations invested $50 million in Bitcoin as of October 2020. 2020 Institutional Investor Digital Assets Survey by Fidelity Digital Assets. 36% of institutional investors surveyed currently invest in digital assets. Almost 60% of all investors surveyed have a neutral or positive perception toward digital assets, and around 80% of investors found something appealing about digital assets. You get to see in terms of a 5-year record for Bitcoin, gold, and S&P 500. Bitcoin, of course, has a return of around 5,200% compared to 75 and 77 respectively. So, in theory, you get to improve Bitcoin production by increasing hash rate, while to continue to de-risk the business by becoming more resilient to potential declines in the price of Bitcoin. So in practice, new miners increase production of Bitcoin and revenue. For instance, from 2020, from 2 Bitcoins a day, that gives you around 500,000 per month, will end up around 15 to 20 Bitcoins per day at 11.7 million per month by Q4 2021. The new facility is to increase 12 times with the fixed cost of electricity, more leverage and exposure to Bitcoin. It goes from 105 megawatts to 500 plus megawatts at the same number of kilowatts per hour. And so mining is considered basically more of the future. So how it exactly works is the Bitcoin transactions are pooled together in something called a block and encrypted by a complex puzzle. Once a block is formed, the miners complete to solve the puzzle. Once solved, the transactions are verified by the network. The new block of verified transaction is attached to a chain of prior blocks, hence the word blockchain. For solving the puzzle, miners are rewarded with Bitcoin. Currently, it's 6.25 Bitcoins per block, and they are solved on average every 10 minutes. And I'm going to go a bit more in details about that 6.25 Bitcoin per block and how that's changing. So, the path to profitable mining. You get to see that, well, this is the equation, I'm not going to go exactly going on it, but the Marathon controls are hash rates, cost of electricity, and corporate expenses. That's what we're really trying to go for it. Marathon doesn't control the network hash rate, price of Bitcoin, block rewards, the number of blocks per year, and I'll go through that in a second, and price of miners. And so we get to see a little bit of their growth potential. So they had recently an increased hash rate of 230% after installing almost 1,400 next-gen miners that partners with Beowulf Energy relocated miners to 105 Bitcoin mining data centers in hardened MT and reduced the aggregate mining cost by 38%. Additional 10,000 S19 Pro miners purchased from Bitmain. Additional 10,000 S19J Pro for miners purchased from Bitmain. And the next thing, all 33,560 deployed, making Marathon one of the largest miners in North America. The next thing we have here is consistent access to low electricity via Beowulf. It is a best-in-class energy generation company with developed, constructed, and acquired operated over 5 billion of power generation and industrial assets. They own around 6 million shares in Marathon, which is basically an idea of skin in the game. So the average production of Bitcoin costs around 4,109 per Bitcoin. And so that is still a high amount, but considering Bitcoin currently is trading somewhere around 23,000 per Bitcoin, the net profit per Bitcoin comes out to be around 19,000. So that is amazing. And with Bitmain's partnership, they have a guaranteed priority access to industry's top miners, decrease the risk of supply constraints, creates a unique barrier to entry. Fixed price to hedge against anticipated future price increases. So, for major orders to date, for August 20, they announced around $23 million contract for 10,500 S19 Pro miners. In October 2020, they purchased around another 10,000 S19 miners. December 2020, they purchased additional 10,000 S19J Pro miners. So, that is quite a lot, and they're obviously increasing their mining potential. And a big reason for that is their Bitcoin mining or Bitcoin block halving, and I'm going to talk about the halving in a second, but just a quick thing, scaling as Bitcoin appreciates. So for instance, when you look into Bitcoin being at 16,000 compared to 20,000, there's still the same amount of numbers of Bitcoin being produced with the same hash rate, with the same average cost, but the revenues per month increases a lot. So they're currently, probably we're looking somewhere at add this to that, so around probably 15 million in revenue per month is what you're getting at, with a gross profit of probably additional 3 million shares, so probably looking at $12 million in gross profits per month. And that is a lot of profit compared to a lot of different companies out there that are trading at similar prices. So moving on, now to the SEC filings. Their annual general meeting will be held on December 29th at 10 a.m. It was moved from December 17th. So the next thing here, we get to see a bunch of insider transactions. Nothing significant there. I mean, this one was a disposal back into the 15th of shares around 639. So even then, I mean, right now, I think it closed around 931. So, well, they definitely lost around 30%. Some of the things on the payments that they have coming up next includes 8.33% no later than 55 days prior to scheduled delivery. This is for the Ant miners regarding their total payment of around $24.8 million. They have some coming up in January 2021, February 2021, March 2021. And the way we need to look at it is if they do have enough cash on hand to cover this cost just in case something happens. Now, in terms of this registration, it was registration for around $200 million worth of shares to be sold. That is just a shelf offering, or their shelf in general, so you don't need to worry about that, at least not in the time being. Disposal of shares around $6.15, that was somewhere around last month. Disposal of shares around $6, where they bought it around 91 cents, $1.96. So nothing scary there. I mean, they've lost around 30% of their value if they would have, because they sold earlier and not somewhere like Friday. Now, in terms of their total assets, when we look into total current assets sit at around 37. This is, by the way, not in thousands, just as it is. So 37.5 million compared to from 6.1 million previously. While their total liability has gone quite down significantly, less than half. So from around 3 million to 1.2. So I like these numbers. They look really promising. Now, in terms of for the revenue, for September 30th, we don't see a massive, perhaps, increase in revenue. Your total revenue goes on from 321 to 835. But there is a significant thing here, is that Bitcoin chain reward, and I'll explain that in a second, Bitcoin block rewards had halved already, and so in reality, you're probably looking somewhere around 1.6 compared to 321 if you were to consider from time to time, because this is a cryptocurrency mining revenue. Your operating loss has doubled, so it's around 2 compared to 807 million, so 2 million short. So there you go, 807,000, my bad, not million. Now, the next thing here we're looking at is their net loss. Their net loss is around 2 million compared to 754, which is basically the same thing. The question comes in, is the recent jump in Bitcoin able to somewhat balance this out? Well, definitely with all the investments they're doing and advancements, especially since they already halved and we have the current data after it halved, it is very potential that their next year they're definitely going to be net positive. And that is something amazing. Now, what is Bitcoin halving? So, Bitcoin halved at, on May 11th, 2020, around 3 p.m. Eastern Standard Time. Bitcoin halving event is a reward for Bitcoin mining transaction is cut in half. The event also cuts a half Bitcoin inflation rate and the rate of which new Bitcoins enter circulation. Both previous halvings have correlated with intense booms and burst cycles that have ended with higher prices than the prior events. This is amazing. Now, Bitcoin's code also means that the rewards to the miners will continue to have every 210,000 blocks until they reach zero. Limit the number of Bitcoins that will ever exist to around 21 million. 21 million. Now, the next thing we want to look at is their price over book. And I usually go on to Yahoo Finance. You go on and quickly put in your ticker, and you go down to statistics, and you get to see the price per book. It's around 10 bucks. Price per sale is around 297. Now, both are around 2 and 3 for SP 500 in terms of averages, and that is a massive, massive over price. But the thing is, this is a lot about intrinsic value and what the value is going to be next year. Unfortunately, the markets have been looking that way with the stock market, that we're always looking into intrinsic value rather than actual value. And so that is something to consider. Now, the next thing we're looking at here is their financials. So quickly going on to their financials, let's go quarterly. We get to see their gross profits have been improving from quarter to quarter. Now, when it comes to net income, it has been somewhat stable. And when we look into, let's say, their annual results, going on from 2016 to 2019, we get to see their gross profits haven't been doing the best. Neither is the net, well, net income has been improving a lot, but not still positive. I expect by 2021 we would be positive, and that is something good. The prospects for the future does look good, and that's why it's trading higher. Now, coming in towards the technical analysis part, we're starting off with 1 week perspective. Before we do so, please make sure, if you're enjoying these videos and discussion that we're having, you find any value to this, please drop a subscribe. A lot of you folks have watched my videos for quite some time but haven't dropped that subscribe yet, and turn notifications on. Now, we have also a Discord server that is totally free. We just discuss the stocks all day, chats and stuff during the trading hours, and share charts. If you would like to join that one, please go ahead. The link is in the description below. It's free. Now, on a 1 week perspective, what we get to see is an MACD that is really improving. 80x is just hit the 50. When I say hit the 50, above 50, that's where usually you can get to see some reversals, negative reversals. So that worries me a little. 20% R is overbought. That's another worry point. MACD here is actually improving. It's very strong and momentum looks strong. Moving averages all across the board are extremely bullish. Now, on the 1 day perspective, what we get to see is a little bit, things look a little bit rougher on one day candles. Now, yes, the last candle was green, but look at that curve down. That's something worrisome. Moving averages are extremely bullish, and this is the trading action zone between the 10 SMA and 30 EMA. You get to see it already play through where you saw a reversal. MACD looks really bullish and looks like it still has a trend. 80X shows another leg up. William %R shows it's overbought, and momentum looks strong. Now, on a 2-hour perspective, what we get to see here is something along this, more of a negative line. So MACD shows in a pullback, momentum shows a pullback, 80X shows a pullback, William %R shows a pullback has already started. Moving averages are showing this one that it's already probably pulled back all the way to 861, and it's in the trading action zone where positive reversals are likely, and it's playing through a positive reversal. Below 861 on the 2 hours, that reversal is less likely. Now, moving average band, even though it doesn't really trade within it all the time, for the sake of the argument, it's 645 at the top, 586 in the middle, and 527 in the bottom. Now, stochastic fast and stochastic slow are both showing there is a potential for another leg up, but expect to pull back before that leg up shoots up back again. Fibonacci retracement shows significant support for Fibonacci's at 829, then 660, 540, 421, and 274. The only resistance up is the 1045 mark. Now, on the price line action, we get to see there is a resistance at 931, above there 948, above there 967, looks little. And then we're doing down to 844, 761, 707, 628, 537, 495, 451, 374, and all the way down to 312. And the absolute one that I would probably think it is in trouble is below the 203. Now, Ed, comes the question in, what do you think about this one? Is it worth a trade or investing? And it was up to 55 bucks back in 2017. So Ed, what do you think? Well, in terms of trading, I think there might be a leg up, and it's going to fluctuate. It's going to drop a little, going to see pullbacks, probably going to skyrocket again with Bitcoin jumping. Bitcoin falls, this probably will fall with it. But when you're talking about investing, the question comes in, do I think investing in this is solid? Well, I wouldn't say invest at $10 because the price over sales is somewhere around 250. Price over book is somewhere around, I think, 10 it was. It's overvalued at this level, but intrinsic value, when you think about in the future by the end of Q4 2021, then definitely, yeah, it will probably worth 10 bucks. But the question is, you want to buy it where it's worth 10 bucks and around Q4 2021 it's worth 10 bucks? Or do you want to buy it somewhere around $2 or $3 or hell, $5, whatever the pullback gets to be, and then investing in it and leaving there for a good time? I definitely think this is a solid investment once it gets a pullback. Now in trading, I think you can trade this one both ways. A little bit on the short, although be very careful because I wouldn't short this. I'm not insane. But maybe somewhere around 1045 goes down to 628 and then you long it again and jump back on and see a bounce, etc. There's a little bit of a gap to fill here, but it was, I think, filled. Yeah, it was there a long time ago. Nonetheless, I definitely think it's going to fluctuate. It's going to see it probably drop sooner or later. Now the question is, will it see probably 20 bucks or 15 bucks or $12? Hey, I definitely think that's possible. I definitely do, especially with Bitcoin prices going insane. And people aren't really looking at the actual value when they're trading. Half the time they're looking at intrinsic value. That is a dangerous thing if you're investing, but if you're trading, well, you might get a lot of money out of this. Always follow volume. So when you look into the volume here, volume is dropping a little, but it was stable. So once volume, let's say, if volume doesn't drop below this, I think, you might actually see another jump. It definitely has a leg up. But investing, it will see a pullback, and maybe invest on a pullback. That is my advice. What do you think about this one? Make sure to drop a like in the comments below. Share, subscribe, and like. Have a wonderful day.